The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians in this very important market week. And this is the 19th of April, so we passed the midway point. April's close in the monthly chart is going to be really important. This is what we're looking at. The E-mini is down 24, 26.85. This is the S&P E-mini. Made a peak B. I shown subscribers yesterday in my update and my early morning look at the markets when I send out my Traders Corner, which is the last chart I sent from my opening call newsletter. That's at 8:35. But I start sending charts out. Wow, 6:30, 7 o'clock, I start sending them out. And then what I do is I was supposed to the den. This is the chart that I showed, and I showed a cup formation with a left side, right side price time match, which went to today. It was a day early. It went into the 2720s. Why 2720s? 2726 was the high of that very ugly candle. Was that the 23rd or 22nd? 22nd of March. That's where we really saw the down move to the downside. Look how long it's taken to get to that point, but it has risen, and the MACD has rallied quite nicely, not as well as it had up at that point, but it's rallied very well. The stochastic is at 92%. That is still very positive and suggests that there should still be some upside, some residual strength, enough to try to push it back to the upside and probably just take out this peak that was made at 2720. 27, let me double check that, 2718.50, and get to the next left side, right side price time match, which is a little higher than that. However, this is the point where I said that I'm starting to see overbought situations, so the residual strength is really being tested. Let's go through a bunch of things here. Made a peak E in the 120-minute chart at 2718.50. I showed the subscribers this morning that 2701s was critical level to hold. There was a left side, right side price time match in the Chapman wave methodology. MACD had been turning down, stochastic was turning down, so it was a very important moment. But it took it out and did a more than a one-to-one to the downside. Now we're testing very important low on the left side. That was at 4 o'clock. The close. Market close on the 17th of April, the low was 2688.25, and we're at 2685.50. We're already below that. However, the stochastic is getting to some kind of support, not the MACD. So it's going to take a little patience to see some kind of a turnaround to the upside. I'm going to get rid of this 120-minute chart now because it's really important to put a bunch of things together. There we go. The Dow down about 131. Made a peak B, and this is the in the Chapman wave methodology. This is that inside wedge resistance level. I'm anticipating that we're going to find some kind of support over the next 6 or 7 hours. That's going into tomorrow morning, early morning. Options expiration is a very good day to start messing around with the options up and down, because it's been really sharp to the upside this week. Why not? Yesterday I said for my subscribers that we were anticipating some kind of a breather to take place, that IBM might help it. And yes, IBM did influence the market, but there were some other factors that I'm going to talk about in a moment that are really important here. And I think most of my subscribers understand where I'm at right now, that I'm looking at a longer term, the market to move higher. Intermediate term, I think that we're still in this very choppy phase. I don't think the upside is quite finished yet. But I'm beginning to look at this and say, you know what? We're running out of leadership, and that's going to be really important. I'll get to it. So here we go. The Dow has very strong 24,505 support in the 9-period moving average, but I suspect that it's right here at the 14-period moving average at about 24,585, just another 20 points down. That's going to be the real test of strength. Upside, of course, is the high of yesterday, but really at this point we can go step by step 24,650s to 24,690s will be the very short-term resistance. S&P, SPX, S&P down 22 at 2686. Made a doji high. That candle was really very important yesterday, suggesting that there could be a dip to the downside. That's exactly what we're getting right now. Calling it a dip, it might be more than that if it takes that 2674, the 9-period moving average. I think we're getting close to some kind of attempt at support. And meantime, back at the range, the high that was made of 2717.49, I think we go a little higher than that, and then the market becomes a lot more vulnerable. That's my thinking at this particular point. Let's go to the Qs, 1, 2, 3. The QQQ series, 164.60 down $1.84. I've really been thinking about this, and I'm now pretty convinced that we're going to be going back into the short side very soon. Remember, we were able to short the Qs within an hour and within less than a point of the all-time high. We took real nice profits on the way down. We're out. We got stopped out. I just didn't want to give back huge gains. I mean, that's silly to do. So now we're going to have to try to re-enter that short position. I don't know which way we'll do it, whether it'll be via the Qs or whether it'll be one of the inverted ETFs. We'll see. Nothing to think about right at this moment. I want to see at 86%, the stochastic still good. MACD is still strong. So I want to see how much residual strength there is. Let's go to the IWM. IWM right now is down 1 at 156.42. It was kind of the leader in some ways. On the upside, it's gone to peak C with a doji candle high. Made that left side, right side price time match exactly. Pulling back a little bit, but the stochastic and MACD are still strong. I still think there's enough residual strength to try to go a little higher. Not sure about making all-time highs yet. Let's go to the, right now I want to go to the TLT because that's really important. 119.10, down $1.20. Look at this chart. Look at that move in the 30-year. Look at the move in the 10-year, and look at the new recovery high. I have no choice but to call this a leg F/A. Oh my God, if it's an A. Anyway, a leg F in the weekly chart of the the FVX, the 5-year T-note. I have to tell you, I've been saying this for a long time. I think it's going to be rates that scares the market. It doesn't have to impact it vociferously, but I think it's going to be a factor, and we cannot rule it out. Higher rates, look what it's done to the HGX. HGX is pulling back sharply here. We are still short the PHM, which is Pulte Home Group, Home Builders. Whoa, look at that move. Down 4.7% today alone. So it's at 28.54. We're still short from 33.51. All-time high was at 35.21. This is really not good for the home builders, and this will be one of the leaders. So this is not a good sign at all. Let's now go to gold. Gold should be rallying here, and it's not. It's down 8 points at 13.45. The silver, which I was more impressed with yesterday, and I'm still impressed with, I'm beginning to think this is really it looks very much like a short squeeze. If you get silver moving up like this, and you get gold moving in, not the opposite, it is opposite today, but gold had a rally, but it isn't leading. And I like to see gold lead with silver following, occasionally taking a little bit of a lead. This is a divergence that's really unusual. And if you look at the dollar, which we are still long, it's at 89.82, up 21 cents. I'll talk about that. I'm looking for an interesting week. I'll be back.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petrocurrencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Now let me talk about those peripheral things that I wanted to mention earlier. The dollar says to me, the way it's been handling gold's rally, and yet it's stuck in this range, but it hasn't broken down or broken out of the range. The dollar says to me, keep in mind that if the dollar starts to rally strongly, just as we've seen crude oil spike, at least for me, way above the 65s that I thought would be the limit to the upside in the shorter term, it just powered right through. We've got yields breaking out in certain regards. We've got the cross currents that I like to look at that are either pro currents or cross currents. And in this particular instance, you've got the semiconductors, which we are now out, smashing to the downside, down 4 at 100.42. I say smash, why? Because this arch formation only went to a B, kind of held, but I kept saying applied materials, Lam Research, they're not acting well. I've been saying it for months, or at least weeks and weeks and weeks. And now I'm very concerned, and I'm beginning to think that we've got a hat-trick top potential in the SMHs, the Semiconductor Market Vectors ETF, with a peak D probably going to form in April in the monthly chart, just as the MACD and stochastic are turning down. Still very positive because it's at 84% in the stochastic with a week to go, or less than a week. And we've got, a week and a half. And we've got this MACD just turning down. But it's the weekly technicals that I've been really worried about. I wanted to play the upside. We did so real nicely in our 3 times long and our 1 times long. And now we're out. And do we go back to the short position? I think there's a little bit of a bounce to come, and then we must make a decision. But those cross currents are really important because these were leaders. If you look at the XLK, look at this. All of a sudden, the XLK goes to a peak here at 71.34 That was the all-time high back on the 13th of March. That's a peak D in the weekly. Only a leg C in the monthly. I've tried to count this all sorts of ways, but I am going to start thinking out of all the indicators, I'm going to say that this fractional new high at 47.97 in September of 2016, and then 9 cents higher in October. I'm calling that a Chapman Wave Phantom Peak C. That's one of the reasons why I've always avoided in my trying to automate the notations, because there are so many things that I pick up that are just purely human. My eye tells me that it's wrong, that a computer keeps. If I had to include this phantom peak, can you imagine how many phantom peaks I'd have? I've got a rule, and my rule is rule-based. That's if you're going to optimize, if you're going to change your strategy and change it to every single condition, you just don't have a strategy. So this is an unusual and acceptable fractional change in the wave count. It matches everything else. It matches the QQQs, peak D. It matches just everything. I'm talking about this as something that is really important to me. So that is the XLK, which is the tech sector of the S&P Select Tech Spider Fund. I'm calling this, in fact, I'm going to do it right now. I'm calling this edit D, and I'm putting it at D, but I'm also going to do it so that I can be very clear that it isn't officially a D. If it was computerized, it would not be a D. If it is visualized using the Chapman Wave methodology, it is an acceptable D. It doesn't have to be. What happens so often is that the phantom peak actually gets excluded because eventually you do go to that D. But it could be a little while. So I'm just saying a heads up to say be careful, be careful, be careful. Okay, now let's get to the other. I wanted to talk about just quickly EUR, USDG. A lot of questions have come in. 1.233 pulling back here, another arch formation, still in the weekly chart, just a rectangle from an oval formation. Probably I should call it a rectangle. Let me get rid of this because I like to be as visually correct as I do things visually. This is really a rectangle formation right there. And now what I'll do is I always say, go to the inside of the rectangle, not the outside. Once you've made those aberrational peaks and troughs, it's usually the trading band inside that's most important. So the euro, let's just say above 1.2475, the high of the week of the 30th of March, very positive, it should go to higher highs, and below just 2 weeks ago, the low of 1.221, and that should go lower and test that week of 2nd of March, low of 1.226. Now, if you look at the USD, remember I said it was a little bit unusual to have the euro, the euro and the yen going in the same direction. The yen, USD JPY, looks very much like it wants to go to a leg B or extend this leg A if it's tomorrow, but it wants to go above that 107.74 level. It's at 107.36 right now. It looks like it wants to go high. It wants to attract the 9-period moving average magnet and 200-period exponential moving average in the 109 area. That's just the way it's looking now. That completely fails if you see it trading at 106.50 by Tuesday of next week. This is really an important week. It's the first week that we've actually seen, look at this, crude oil breaks out of a range in the last 3 days. Actually, I'd say in the last week. It went above the 200-period moving average. I really have to call it C right now, leg C. Weekly chart and the daily and the monthly chart is in leg D. This is very good action. And if you look at the XAL, XAL right now is down $1.78. Had a good session yesterday, now it's just giving that back. So I'm beginning to think of myself as one day late Chapman because for how many days now have I said there was a stock that we had on our list that we wanted to buy, or we put in a bid, but we just missed the entry point and it's up 6% or 3%. We've got a stock that we wanted to buy. We had it at $14. I made a real tight stop because of the pattern that was forming. It was a fabulous pattern I always like to look at for a breakout to the upside. It did break to the upside, and then it took us out for a little loss. And then I liked the action. I wanted it today, and it just took off. And it went from 14, it's trading at $14.73. I mean, come on. And we missed it. I want to say we just missed getting in again today. What can I say? You do your best, but I like to have pretty strict, I have parameters that are very strict. So thank you to one of our dinners who's been with the Chapman, he's a Chapman waiver from the very beginning that I've been at TFNN, pointing out that my trend gauge worked. Yes, I saw it yesterday. That was how I was basing a lot of my interpretation. I completely forgot to mention it in my morning report. The trend gauge gave a very low reading yesterday, so that immediately says that the Dow should be down early morning before it tries to rally. It's exactly what happened. Went earlier, and then it rallied, and then it pulled back sharply. Who's that is the question. That's in our den. That's I don't know if he wants me to mention his name. Why wouldn't he? But he's in the den. He's just made a couple of comments in the last 10 minutes, so you'll see him there. So, all right, next thing I wanted to do is I wanted to talk about some of the other things, how steel's working, how Alcoa's moved up. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So XAL is down sharply. This is another thing about the IYT. It just had that really big move to the up. IYT is trading down 2.29, had a very strong move to the upside. That weekly chart, lowercase h, maybe go to a lowercase m. Let's put it this way. This is becoming a way more selective market than we've had in a very long time, number one. Number two is within groups. Look at American Express today. American Express up 6.28, up 101 at 101.44. Didn't look very good the other day. And then out of the, so I'm asked constantly, earnings are coming out today. What would you do? Would you add to this or would you? And my answer is that, you know, I don't find a theme here in the earnings reports, even when it's fundamental, let alone technical. I don't know how things are going to respond because, look, Goldman Sachs, that was really not a bad report at all. Gets smashed to the downside. And Morgan Stanley, smashed to the downside, coming back nicely today. But that was a big move. I mean, before the market was up and then, bam, it closes down sharply. Now it's getting back some of that. Now, the XLF, I'm going to be watching closely. We don't have a position anymore in the XLF, any of the bank stocks. But I'm trying to look at it fresh. I think I need today and tomorrow just to reassess because the high interest rates should positively impact some part of the banks. Not all the banks and not all the bank earnings, but some parts of some banks. How it does is going to be very important. So I wouldn't rule them out. I don't like the fact that they're not participating. That's another big divergence that I'm looking at here. So let's just go to this one more time. I've got a lot of questions, but let me just do it this way. I've gone through almost everything, gone through crude, gone through bonds, gone through, yeah. So I had a question about SKX, which is Skechers, pulling back sharply. Oh, here's one that has earnings, I believe, today. 41.51 down 70 cents. It's at a new leg B in the daily chart. I suppose I could make it an alternate count G because there was an F over there. That's really unusual. First of all, this is one of the most unusual. I've seen the last 3 weeks. I've seen unusual chart formations. You know, I've got, you know, like some people have perfect pitch. I have not a perfect eye, but I remember chart patterns really distinctly, especially if they're unusual. I might not remember the name of whatever it is. Sometimes I have to go back and think, what was I looking at? I had this. Anyway, at this point, this is look at this large rectangle formation. All I can say is that I would not be surprised, based on the activity in Skechers, trading at 41.53, down 68 cents, if there is a good report. And I'm just going to have to do this here to say, yeah, I could count this as a G/C. I'm going to put it in, but it's a very unusual pattern. And to make an all-time high, well, it's not an all-time high. Oh, good. All right, I thought it was an all-time high, and peak G would be so unusual. Unusual in this particular, sorry, and a leg B. And then a peak B would be very unusual without going to an F or a G. All I'm going to say is, it seems that earnings, that things have improved in Skechers, different to the bottoms that were made in many of the other retail stocks that were down to the lows. This one's closer to the midpoint or even a little bit into the upper range. So I'm just going to say, I wouldn't add here thinking that there'd be a good report tonight and then it'll spike to the upside. I just wouldn't want the risk. If you've got a good position, you're making money, why mess with that? Look, if this drops 4 points or so, it drops 10%. That takes it down to the 37s. That's underneath the 38, the low that was made. I just wouldn't take a risk. You're in a position, if you're in a position, hold it. It's in a leg E in the weekly chart. Technicals are good, not great. It's the monthly chart that's really quite impressive in leg D, but it is a D. So I'm just not going to say to you that if there was no report today, I'd say, you know what, I don't like this action. I now see resistance in the 41.70 to the 42.30 area. If it closes above 42.70 in the next 2 days, that is good action. But if it pulls back here and it starts to trade under 41, just watch out. That's all I can say. Next question I had is FCX. So this is Freeport McMoran up in leg D, not an all-time high. The previous high was at peak D in the weekly chart. What was it in the daily? Oh, it was an alternate count. So we went to A. So that's A, B, CDE. This is a peak E right here, very extended. This looked like it was distribution, and in fact it did pull back sharply from the 20, just over 20 to just about 17. Then it went a little low to the 16s. Now it's in peak A, B, C, D. It's acting very well, and the stochastic is really improving a lot. So the question was, do I think it can go to the 20s soon? And my answer is, based on the technicals right now, and the fact that the week is not finished, we've got Friday to go, but so far it's broken the weekly downtrend line. I think it can go to the 19.90, 20.20 area, but I think that starts to get it pretty extended. 22.59 is the 200 period exponential moving average in the monthly chart. I think it's going to take a little while to get there. If you look at copper, there's a copper stock, mostly. It's gone to leg E with a bit of a pullback today. Nice action, but it got repelled at that line that the FCX broke out of. This got repelled and has pulled back from it. So I'm just going to say, I think there's a fairly limited upside. It would not surprise me right at this moment to keep thinking that the downside for FCX is also somewhat limited right now. There is the gap that was yesterday's high, a low of 1881, previous day's high of the 17th at 18.41. I suspect that the 1870s is pretty good support. If it takes that out, you're looking at a longer consolidation, but holding very well. And if you're in it and long, congratulations, fabulous move. Leg D, MACD and stochastic are saying it should go higher. I hope that helps. I was looking, I had a question about cane. Cane is an unusual, it's the Tucrium ETF for sugar, obviously, and it's at 7.87. It is beginning to show signs of attempting a basing formation. And if you look at sugar, SB, yeah, that as well, with that big gap and push down 3 days ago, then a lower low yesterday, but closing inside, now making a slightly higher high than yesterday, but still within that range. Until it takes out 1194 is the continuous contract sugar 9-period moving average. Until it closes above 12.20, that shouldn't be a big deal if it's going to turn around as quickly as it came down. But if it can get to 12.20, I think the weekly chart is suggesting that a basing formation is unfolding, and that there's enough evidence to say, look at this weekly chart. Look at this descending triangle. It's held the base, and it needs to break above 1252 for the 9-period moving average in the monthly chart, and then it can tackle that long-term, very long-term from October of 2016, long-term downtrend line. We'll see. Maybe this is just the start of something, but it's a better start than usual. If you look at coffee, cocoa continuous, this is in a leg B. I'm calling it a B. Very strong move to the upside, holding very well. And coffee is like sugar. It is attempting, but it's not as positive a pattern right now. The sugar is a little bit better. I'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks!
Larry Pesavento will be hosting a 90-minute webinar this coming Tuesday, April 24th for all Fibonacci 24/7 subscribers. Larry has teamed up with fellow trader Jim Bartoloni for this informative 90-minute workshop, taking the ABCD pattern to the next level. Throughout this 90-minute live webinar, some of the topics Larry and Bart will be discussing include the origin of the 1.618, the golden mean, the relationship between numbers and cycles, time and price, the simple math behind market moves, and much, much more. This workshop will be archived if you can't attend live, and all new subscribers get a 30-day money-back guarantee when signing up for Fibonacci 24/7, so you have nothing to risk. For all the details and to sign up for Fibonacci 24/7 today while gaining access to Larry and Bart's webinar Taking the ABCD Pattern to the Next Level, visit the front page of TFNN.com now. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, so we've been through some of the usual questions about oil and the financials. Had a question about, hi Basil, when you have time, can you look at PM and MO on long-term monthly charts where you see support? PM had earnings, that's Philip Morris had earnings today and raised guidance for 2018 fiscal year. Both have good dividends. Thanks, George. Okay, so PM right now is Philip Morris. Down 16.80 at 84.65, down 16%. So let me just do, it won't take it long. I'm just going to quickly do the Chapman wave notation. I'm pretty sure that that was the low, yes. Yep, that's the low. Okay, so peak A, peak B, peak B, that was a peak C, that was a peak D, and that's a peak E. And then it screams to peak F. Every once in a while, we get one of these charts where you get the E, which looks like everything's perfect for a sharp sell-off. Then the MACD doesn't hold down for very long, and it makes the M appropriate for Philip Morris. It makes the M pattern, and it goes to peak F. And that was the all-time high. Or was it? No, it wasn't the all-time high. 124. So I think the all-time high. Yeah, it was the all-time high. So all-time high was back in 2017. Is that May? June. In June at 123.55. And now it's down at 84.82. So here's a good question. So you see, my problem with the earnings dividend stocks, the Chevrons, the Exxons, the Verizons, the Verizon, and what's the other one? Telephone, and Philip Morris, is that I haven't trusted their capital gains charts. In other words, I'd like to look at a dividend stock and say, I have the potential for capital gains as well as the dividend. I want to see 3%, 5% in the capital gain, and then I want to get that 3 to 4% or maybe 4.5% of the dividend. I don't want to risk my capital for 7 or 8 or 10% for a dividend that I still have to pay money on, tax on. So I try to avoid that as much as I can for subscribers. So I'm looking at Philip Morris. The monthly looks like so far it's going to close under both December and November of 2016, the lows of 86.78, I don't know. It's got a week and a half to go. I just don't think that this is where, regardless of anything that you think of these companies, and I think that it is Altria that has the, is it Altria that has the different products, and Philip Morris still has a cigarette company, part of the company. I'm not sure which is which. Looking at this, I'd wait for a test, a whole 3 weeks of testing in the 82 to 80 level. If it can hold there, then maybe we've got something. So PM is international and MO is domestic. Thank you, Code in the debt. So now let's look at MMO. Yes, it's also coming down. It's being impacted, minus 4.3, minus 4.73, down 56 at 56.77. This one is a better looking chart, but it is harder to find support because it's taking out that support right there in the 56.15s. It's right there now. I'm going to say hold off a little bit. I believe that you will get a price and you will get something that gives you a much better dividend in relation to the price. But I want to see that the risk, that the way I'm looking at it, is maybe 2 to 3%. And then you've got yourself at least the dividend that can cover that. And then if there's capital gain of even 1% to 2%, that's a comfortability factor that I'm prepared to live with. 59.75 is the 200-period moving average in the weekly. That would be my target on the upside. First, let's see where it can go. So let's just say it's at 56.76. George, email me again if you see this trading between 54.50 and 53.50. Then let's look at it again. It might need time. It's just bad news is affecting it, but I'm not sure about the fundamentals. You might be looking at this saying it is being impacted with a negative market, and it's being impacted in terms of the actual earnings of one of the divisions. Maybe it's not the whole thing. So let's just see if it can sort itself out. Now, so step aside for now. I wouldn't be in a rush to get in. But, once again, I've said this even when we were long, for maybe 4 years ago, long Smith Weston had a fantastic gain. I said, for those of you, I think it's inappropriate to be buying a manufacturer of firearms. I understand that completely. You're in the market. If you want, you can get your profits and then donate it to whatever you want. But this is looking at the stocks. I'm not going to moralize. I mean, look at race, which is Ferrari. If you had to add up the number of cars and the number of deaths attributed to the speed factor, you could come out with something equally as, morally unacceptable. But I don't get into that. That's a personal matter. Okay, so now I want to just look at the OIH. OIH is in leg D. So this is going to be very interesting. How are these Ds going to be appropriated? Because in the technicals, a D is fantastic. A D that breaks out so sharply is fabulous. In my weekly charts, these have the look of a single leg A. Can they hold the gains? And that's going to be the big question in the whole oil sector and some of the other sectors that have had this single. Look at SLX, which had a huge move to the upside. Leg D, daily, so it looks like a single leg A up, which when it did it before, it pulled back sharply. This is the Van Vector Steel ETF. Look at Alcoa. I mean, come on. Leg C, 59.96. Just 2 weeks ago, it was in the 46s. This is a huge move. And I have to consider that this is a leg C in the weekly chart. Leg C in the weekly and a leg D in the monthly. And it's just tariff news, because I don't think that the aluminums have seen this kind of fundamental progress in the outlook as well as in the actual earnings. And SLX is really mixed. Steels, to me, this is more news related than the actual. Look, when I say steel peak E, and look at that after that D in the weekly chart. This is just nothing. AKS had a very nice gain yesterday, AK Steel. But even then, it looks like it's more news-driven than fundamentals. Okay, nitty-gritties. I want to, could I look at, what was the question? Could I look at the IYR, which is the REITs? Well, the REITs, under pressure here, gone to a peak C in the daily, had a peak D top, had a peak D weekly, had a peak F in the monthly, way back in December, January of 2016, 2017, up in the 85s, trading right now in the 74s. I don't think it's ready. Here's where I would look at dividend stocks. I'm saying, rather than getting to the oil, multinational oils, rather than getting to the telecommunications, because I think that there's a lot of pressure to switch out of some of these. The costs are extreme, especially since the mobile is being included as separate. I wouldn't be surprised if the IYR gives a much better dividend later on. I'll be back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So we're looking at Nucor, and the DNP said Charlotte-based Nucor reports strong first quarter earnings, predicts even better results on the horizon. But wait a minute, it goes to an all-time high of 70, just over 70, plummets down to 59. And now it's trading at 65. If it's such great earnings, it shouldn't have had such a big plummet to the downside. So I think it's mixed. And also, Nucor is one of the very best of the steel companies. There's a big difference between that and, say, AKS Steel. So I'm going to be watching it closely. It is acting well on the monthly chart. But I just want to put it into perspective. If it's acting so well and the earnings are so great, it shouldn't have had such a big decline and shouldn't have been chopping around for the whole of 2018 from the 70 area, just chop, chop, chop. So keep in mind that it's individual stocks as well. Now, before we go off air, and you've got Steve, you've got Dave, you've got Tom, you've got Andy coming up. Great programming still. Let me just say, I'm watching the VIX index. I said to subscribers yesterday to my opening call, I anticipate a little bit of a bounce in the VIX in the coming day or two. But if the VIX is 16.42 by Friday's close, if it gets back over the 9-period moving average of 18.24 in the weekly chart, that's going to be very unusual action. It was just 1 week below it in multi-weeks. So this is going to say, then we could start to see very limited upside. Let me put my story in front of you right now. I think this is a Chapman Wave methodology. I believe we're pulling back here in Chapman Wave 4. There should be a nominal new high above 24,858. Then I'm going to make some decisions here about what I'm really looking at in the intermediate term to the shorter term. What's going on? Is this just another arch formation that should fail? The MACD and stochastic in the daily chart are still really strong, even with today's pullback. On balance volumes not, but everything else is. That's what I'm going to assess. And I'm going to assess what is the impact of the SMHs on the general market. How much more can the Qs go higher if you've got them impacted like the XLK is? And individual stocks tend to be, some of them are doing fantastically. And the one I missed today again is now up almost 5%. So individual stocks can do it for you, but I'm thinking we've got to be real careful here. And I'm watching the dollar. The dollar right now is up 21 cents. Let's see what happens if we can get to 90 in the next 3 days. I'll be back tomorrow. Have a great day.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.